everyone was able to take a break and enjoy their holidays. And I hope everyone is well and safe. So for today's discussion, we'll just have a refresher for and we'll discuss the supply and use table framework. So this is um, for the newcomers and so that they'll have a introductory like course on the SUT. So for the outline of today's presentation, we'll go through the overview of the supply and use table, and then we'll each discuss the components as well as the importance of the SUT in our work. So just an overview, the supply and use table describes an entire economy by industry and by product. It shows how products such as goods and services are brought into an economy either as a result of domestic production or imports from other countries. And through the supply and use table, we can determine how these same products are used as intermediate consumption, final consumption, gross capital formation, and exports. So again, it is an integral part of the System of National Accounts 2008, forming the central framework for the compilation of a single and coherent estimate of GDP, which takes into account all the components of production, income, and expenditure. So the SUT is able to provide key links to other parts of the SNA framework. Aside from that, it provides detailed information on the production processes and interdependencies, the use of goods and services, as well as the generation of income accounts by industry and sector. So later on, we'll see how the supply news table answers who produces the type of goods and services and who purchases these types of goods and services and how much value added is generated in the process. So I'll turn it over now to Monina, who will discuss the supply table. Over to you.
Thank you, Nins. I'll be sharing my screen. All right. Is everyone able to see my screen? Yes.
Yes, ma'am.
Okay. Right. Thank you. All right. So I'll be focusing on the supply table for this afternoon's discussion and the means on the use table. All right. So this will be pretty basic. Please do let me know if you'd like me to slow down or speed up the discussion. And sprinkled throughout the session today are a few questions, some quiz type questions, not really to test our existing knowledge, but to sort of pique our interest in the elements of the supply and use table. So we'll be giving out prizes. We'll figure out how to do it for our folks from India and Singapore, but but please do participate in our quizzes. All right, so these are just like 5 questions just sprinkled throughout. Okay, so anyway, for the supply table, our outline will be as follows. So I'll be first giving an overview of the supply table, and then we'll delve into the structure of the supply table by going into each component of it. All right, so most of the discussion will really circle around the structure of the supply table. All right. Without any further ado, let's go into the overview of the supply table. So this table shows us the supply of both goods and services in the economy by type of product and by type of industry, right? So let's say, as an example, we have an economy with only agriculture and fishing as its sole industries. And under these, we have several goods, but among the major goods under these industries are crops and fish. So suppose you have a supply of $500 worth of crops and $200 worth of fish in the economy. The supply table is able to provide us information on the supply of goods and services belonging to these industries. So suppose, just to break down further the supply that we have per product, suppose that the total supply of crops comprises $300 worth of wheat and $200 worth of corn. And then the total supply of fish comprises $200 worth of fish. So apart from this, the supply table does not stop here. It also gives us information on who produces this supply. So where is this supply coming from? Are these goods and services produced domestically or imported from abroad? So we can actually have goods and services that may be mainly produced within the economy or mainly imported from elsewhere. So we can further distinguish, for example, where $300 worth of wheat was produced. So maybe majority of it, such as $250, was produced domestically, and a portion, such as $50, was imported abroad. Same thing for corn, and then maybe for fish, majority of it was produced domestically, and $50 was imported from abroad. So the total supply within the economy is thus just the sum of our domestic production and imports, and just a few valuations and adjustments along the way. The supply table then arranges all this information into a matrix where the economy's resources are broken down depending on who produces the resources, where it comes from, and which industries they belong to. Right. So I hope that was clear. So this is a fairly general and easy interpretation of what the supply table is for. Now for the composition of the supply table. The valuation of supply initially is at basic prices, while the expenditure where one already purchases such supply is normally recorded at purchaser's prices. So from the purchaser's point of view, we have here at the right, the purchasers would then be buying products, and these products will already include the margins and taxes in the price. But from the perspective of the producer, the output is recorded as the price of the good without the margins and taxes, right? So to bridge the two, we perform adjustments here in the middle to bridge or to connect supply at basic prices to supply at purchasers' prices. So thus the supply table consists of the following parts. So at basic prices, we have the two parts we broke down earlier, domestic production and imports. And then we compile the margins, which are usually just trade and transport margins, our taxes on products, and we subtract subsidies on products. And adding all of this, we get supply at purchasers' prices, which we will be equating to use at purchasers' prices. And apart from just equating the totals, we will also be equating the supply and use per product to achieve the product balances. And it makes sense because, of course, what is supplied in the economy must have been used by someone in the economy for whatever purpose, right? Okay, so we'll discuss more about the procedures later. Just to visualize how the supply table looks like, we can turn to this table here. So this is how we compile data for the supply table. So first, we arrange the products in a column at the left. So we must have a basket of all goods and services within the economy. We compile a list of all of that, put that in a column. And then we arrange them, we classify them and arrange them maybe using CPC or the Central Product Classification. And then further, we compile data on the total supply of each product that is available in the economy. So it's good to start with the totals first, and then from there on, fill in the missing pieces. We further determine the source of the supply per product. So were they domestically produced or were they produced elsewhere and imported by the economy? So within this domestic production portion, notice that we don't have any figures yet. It's because we need to further identify the breakdown of domestic production by specific industries. And we don't need to do this for imports since we simply have just a column for the imports of all goods and services per product. So here we are expanding the the supply table, such that we identify which domestic industries produced those goods and services. And then, as I mentioned earlier, there are some valuations and adjustments that we do along the way to account for purchases by residents abroad, to exclude purchases by non-residents in the home economy, and then we translate the table in basic prices into supply at purchasers' prices by including trade margins, transportation margins, and taxes on products. And we also exclude subsidies on products. So now, if you notice here, below two, so of course we have here total supply at basic prices. In the last column, we'll be having total supply at purchasers' prices, which is row-wise. We just the total supply per product. So 205 will be total supply for good one, considering supply at basic prices, imports, and our valuation adjustments, and so on. And then column-wise, we have an additional row at the bottom which provides the total output per industry. So this is typically the structure of the supply table. And just to add more detail to this, we can now distinguish the different components of the supply news table. So sorry, the supply table. Right. So before we go into each component, it's important to note that at the top here, we have the industries. And then here at the left hand portion, we have the goods and services, or what you call products or commodities. So since we have more products in the economy than industries, supply and use tables actually would be rectangular in shape rather than square, but some would be square, right? So to give names to each block or portion in the supply table, let's identify them one by one. So now highlighted in green, we have the domestic production matrix, which just provides the output generated by domestic economic activity. So these are all goods and services produced domestically, measured at basic prices. Next, we have our imports matrix. These would just summarize the total imports by product from, of course, abroad. And ideally, these should be in CIF prices. If not, or rather, these should be at FOB, but if not, you perform adjustments to translate CIF to FOB prices. So if you notice here, we highlighted three different columns here. So we have the total imports of goods and services at CIF prices, usually in the first highlighted column. Second, we have this adjustment column for CIF to FOB. And then we have total imports, the adjusted imports column at the right. Apart from that, we also have two imports related adjustments in the rows, and these would be the same CIF to FOB adjustment on imports row, similar to the column that we have. And then we have a row for direct purchases of residents abroad. All right. So the purpose of the CIF to FOB adjustment here in the row is just to capture total imports without double counting, and I'll delve into that further later. Okay. So once we add our domestic production and total imports, we get total supply at basic prices. So it's simply a vector. And then we will be having our valuation adjustments. So these are compiled to bridge total supply at basic prices to purchasers' prices, and are comprised of our trade and transport margins and taxes less subsidies on products. So trade margins would simply be the markup for trade services. Transport margins would represent freight transportation services of products paid separately by the purchaser. And finally, we have total supply at purchasers' prices, highlighted here in blue, and total output by economic activity, and total imports highlighted in blue in the row. Okay, so on to our first quiz. It's very simple, and the mechanics here is the first to get the right answer will be winning a prize from Means and I. Okay, so please do prepare your keyboards and chat the answer on my signal. So the question is, the total supply of resources, these are goods and services within the domestic economy, is sourced from blank and blank. And our choices are listed here, A, B, C, or D. Okay, so you can just type in the letter of your answer, and you may start now. Okay, so when I said now, I think it's Michael who first got it. Sorry, Jam and Irene. Yes, so the answer is B. So I'll. Sorry, Ate Irene. I think when I said after my go signal, I'm not sure if it's the internet, but I saw Michael's immediately when I said go. So okay, Michael gets the right answer. It is B, domestic production and imports. So way to go. And I also encourage newcomers to participate and answer the questions. Okay. All right. Thank you. All right. So now let's move on to our first block or component in the supply table. And this is the largest component of the supply table, domestic production matrix. So it includes all primary and secondary goods and services produced by domestic enterprises and the government. And of course, they are valued at basic prices. So these domestic production, of course, should come from or may come from enterprises in agriculture, industry, construction, trade, transport, and other services. It also includes services produced by the government, which are valued at cost of production. So the domestic output matrix reflects the principal and secondary products of industries, including byproducts. So an example of the difference between principal and secondary products would be consider a cooperative of farmers that engages primarily in raising crops. So let's say the major crop would be wheat, and suppose that is good one here. So the co-op's activity will be classified in the agricultural industry since they are concerned in the principal activity is raising crops. So industry one would therefore be agriculture, all right? So the output of the agriculture sector with its major or primary activity as raising crops would be $80. Let's say that's $80, okay? So this would be reported in the diagonal where the row for wheat and the column for the agricultural industry will meet. However, farmers would also be involved in other activities such as the trade of agricultural materials, which may appear as a separate and secondary service of the agricultural industry. Suppose that's service 2 and we have $5 worth of value to that. So this means that this industry, the agricultural industry, earns from both agricultural production, such as the raising of wheat, which is its primary activity, and the trading of agricultural materials, which is its secondary activity. So clearly, this does not appear in the diagonal. Okay. Data sources for compiling data on domestic production will include enterprise surveys. These would supply information on the main structural characteristics of different economic activities. It's important also to collect data on total sales and the product breakdown. We also have production surveys and production data from businesses. So this would allow for the estimation of total production by type of product. We can also refer to economic censuses and additional information such as administrative sources, possibly even tax records, company accounts, and in many cases, if there is a lack of information, we might need to use reasonable assumptions about products that are produced in the industry as secondary production. So that said, as we try to observe all forms of output in the economy and measure them, we will notice that not all output by industries are tangible or easily observable, and moreover, not all of them may be sold to the market. In fact, there are three types of output. First would be market output. So market output is produced for sale, is output of goods and services that are produced for sale on the market at economically significant prices. So we have a keyword here, economically significant prices. These are prices that have a significant impact on the amounts that producers are willing to supply and on the amounts purchasers wish to buy. So in other words, these are prices that affect supply and demand decisions or that inform production and consumption decisions. Okay, so examples of market output, majority of the domestic production matrix are actually composed of market output. And examples would be textiles produced by manufacturers, construction services by contractors, etc. Basically, this represents all output by market producers sold to the market, and these are valued at basic prices usually. Second component is non-market output. So as the name suggests, this represents output that is not sold to the market. So these are usually produced by government units and non-profit institutions serving households or NPISH. And these are usually supplied for free or at prices that are not economically significant to other institutional units or to the community as a whole. So in the first place, why do we produce non-market output? Because it may be technically impossible to make individuals or groups pay for collective services such as beautification of parks, public infrastructure, because their consumption cannot be monitored. Riding through a highway is an activity that cannot be monitored, right? So government units and NPISH may also produce and supply goods for which they could charge but choose not to as a matter of social or economic policy. So as such, they are not in fact valued at basic prices, but they are valued rather by total production costs. So we use the sum of costs approach. And again, here prices are not economically significant. So it's a price that is not quantitatively significant from the point of view of either supply or demand because these institutions, governments and NPISH, are non-profit institutions, right? Okay, so a few examples would be education and health services, which may be provided for free or subsidized by these institutions. Finally, we have output for own final use. So these are products usually retained by the producer for his or her or its own use as final consumption or capital formation. So meaning the producer has spent for these to produce these, and then they will actually consume these products for final consumption or capital formation. So the valuation here is actually we use average basic prices of the same goods and services sold on the market. So we're using average basic prices since this kind of output could have been sold to the market, but instead was used by the producer for its own consumption. This is why we impute. So if not, we use total production costs. So an example would be own account gross fixed capital formation. In layman's term, a better example would probably be, for example, textile manufacturer produces a new line. So it does not outsource or ask another producer to make that machine line, but rather that company makes that machine line, and it is retained for use in future production. Okay. Another example would be services of owner-occupied dwellings. So owner-occupied dwellings are examples where owners of households can be treated as owners of unincorporated enterprises producing and consuming housing services within their households. So you can probably imagine a tenant or sorry, a renter on Airbnb owning that property but also renting it out. So if the owner did not rent out his or her own property, we can account for the services produced by that household or by that property if it were sold to the market or if it were rented out to the market. So we can discuss that actually more in the next session because given these types of output, definitely it is not a simple task to compile data on domestic production since there are plenty of unique outputs produced by various industries and institutions. And some examples would include one of them, owner-occupied dwellings, and the others would be activities by the non-observed economy and output of the central bank. So going first to the non-observed economy, these would be activities not captured in regular statistical questionnaires. So it may be because the activity is informal or legal. These are activities that escape the attention of surveys geared to formal activities. But these should still be recorded. Okay. We have or owner-occupied dwellings. Again, these are households that own the dwellings they occupy, and they are formally treated as owners of unincorporated enterprises that produce housing services consumed by the same households. So it's a problem area because there are a lot of assumptions in estimating the value of such services. So again, going back to the Airbnb example, when well-organized markets such as that, for rented housing exist, the output of own account housing services can be valid using the prices of the same kinds of services sold on the market. Of course, in line with the general valuation rules adopted for goods and services produced on own account. So when we estimate for such services, we also take into account the location, neighborhood amenities, size and quality of the dwelling, and many more. But in many instances, there are no well-organized markets that exist, so therefore, other means of estimating must be developed. Right. And finally, we have, among many, the output of the central bank. So if you caught the discussion by Ms. Cheska on FISM last year, recall that there are three functions of the central bank. So first, it oversees the monetary policy of an economy, which is a non-market output that it produces as sort of as a government entity. By overseeing the monetary policy, it functions as a government unit. And in this case, when we estimate output of government, we use the sum of costs approach, as I mentioned earlier. Second type of output it produces is financial intermediation services, which is a market output. And lastly, it also supervises financial institutions, which could either be a market or non-market activity. So in the case that market output cannot be separately estimated from the non-market output of this component, then the entire output should be treated as non-market. So that's tricky. So these are just a few of the areas where compilation and estimation can get a bit difficult and tricky. Okay. So now to wrap up the discussion on domestic production, we simply have many types of output that we need to estimate and collect. And there are a few industries where the collection and estimation of data is not that easy. Okay. Now we move on to imports. So now we're looking beyond the domestic frontier. So these are transactions that occur when there are keywords highlighted here, changes of economic ownership of goods and services between residents and non-residents, regardless of any or missing physical movements of goods across frontiers. So this is how we treat imports in the SNA. They are usually valued at CIF prices. However, in the 2008 System of National Accounts and BPM Balance of Payment Manual 6, total imports of goods are valued at free on board or FOB prices. So thus, an extra row, as you can see here, an extra row and extra column of adjustment must be made to reconcile the different valuations between CIF and FOB. So when we compile total imports of goods and services, there are quite a few sources of data that we can use. So there's a different source for goods and different source for services. So the main sources, of course, for goods would be customs data and IMTS, International Merchandise Trade Statistics. For services, we use the balance of payment or BOP statistics and other specialized statistics on international trade. So we can also use business surveys. And while in the IMTS, it uses a CIF valuation for imports, but the 2008 SNA and Balance of Payment Manual 6 use FOB. So that means that when we collect data on the goods, on the imports of goods, we get them at CIF, but when we collect imports of services, we collect data at FOB prices. So that is why we need these adjustments here. Right. So now we want to know what kind of import and import-related activities should we consider when we get the imports data. We'll provide more examples of such scenarios later because definitely we have different treatments to imports as we have different sources of data. In fact, in the IMTS, to consider imports as a movement of physical movement of goods across borders. But recall that the SNA does not consider mere movement as a factor in considering what is imports and what are not imports. Okay. So there are usually three adjustments related to imports that we perform in the supply table. So again, imports are usually valued at CIF, imports of goods, meaning that the importer records the value of an imported good at the value by which it is sold by the exporter, which is at FOB, plus the cost of bringing that good to the border. You can call that C in the CIF, plus insurance, the I, and freight at F. However, in the 2008 SNA and BPM 6, total imports of goods and services are valued at free FOB or free on board, meaning that the seller is responsible for only taking the goods to its border. Okay, so an extra adjustment in the row and column must be made to reconcile these different valuations. So costs related to transportation to the border, the insurance, and the freight must be taken away from the cost of the product and transferred to the cost of the producer. So let's give an example. So let's say the total price of good one, which is toys, is only 5 USD. But the freight cost to transport it from the Singapore border to the Philippine border is 15 USD. Hence, the total value of the goods recorded at CIF, of toys recorded at CIF, becomes 20 USD. Assuming that there is zero delivery cost from the warehouse of the producer to Singapore's border and zero insurance cost, total CIF is only 15 USD, representing only the freight costs. So in the BOP, when we now collect data on the imports of services, we would also actually be recording the freight services, that is 15 USD. So there emerges now a double counting of this freight service cost in the imports column. So again, there's a $5 worth of the product here, plus $15 worth of freight services under goods one. And then in services one, we also have $15 for freight services. So to adjust, we simply offset with a negative $15 adjustment here in the row for CIF to FOB adjustment on imports. So this removes a double counting in the total value of our imports column. And then we also have an adjustment in the column here, which removes the freight cost from the toys and allocates it here in our adjustment row, so that when we get the total of our adjustment row and column, we only get 0. So again, in other words, the displaced double counted now is added to the adjustment row and column so that the total value is 0. And others, I'll be showing other scenarios related to imports. So how do we know which are imports and which are not? Okay. So here are some inclusions and exclusions under the SNA. First, we have goods sent abroad for processing, but with no change in economic ownership. So it's marked as an X here, and font is in red. Obviously, these are not considered as exports and will not be recorded as imports by the processing economy. So for example, the Philippines sends Malaysia computers so that Malaysia could add in chips. So then those chips would be the value added by Malaysia. But Malaysia will not record the receipt of the computers as imports because there was no sale of these computers from Philippines to Malaysia. They were simply sent to so that value added could be added and so these computers could be processed. So as Malaysia processes these computers by adding its own value added in the form of adding the chips, the Philippines actually pays Malaysia for a fee for processing the computers, which Malaysia considers as an export of its services to the Philippines, and the Philippines considers this an import of their processing services. But take note, there was no recording of imports of goods, but there was a trade in services. So, okay, take note of those differences. We're talking about goods sent abroad, but there will be no, these will not be considered as exports and imports. But the imports and exports of services played a role here. All right. Another example that we will not be considering as imports will be transshipments. So these are mere movements of goods in and out of frontiers. They are not recorded under the SNA, although they are recorded in the IMTS. An example where we can consider, or two examples where we can consider imports under the SNA would be merchanting. So these are recorded in the balance of payments. So these are services. So perhaps, for example, an example would be the purchase of goods by a resident from a non-resident and the subsequent resale to another non-resident. So to make it simple, I'll be mentioning an example. So imagine that I, Monina from the Philippines, will facilitate the sale of fireworks by, let's say, Chini from Singapore to Arushi in India. I purchase the fireworks from Chini and sell it to Arushi, but I will be selling it at a price higher than what Chini sells it to me. So thus I earn a margin from the transaction, and usually in merchanting activities, there are margins in the transactions. So take note that in that statement, I purchased the fireworks from Chini. There is a sale. There is a change in economic ownership from Chini to me. And then my sale to Arushi represents a change of economic ownership from me to Arushi. But I will ask Chini to ship the fireworks from Singapore to where she is, from where she is, all the way to India directly to Arushi, not passing through the Philippines. So here, the ownership flows in two ways, Chini to I to Arushi. But physical movement flows just one way from Chini to Arushi. So this represents merchanting. If you want to be technical about it, so since there is no physical movement going to me, my purchase of the fireworks will be recorded as a negative exports in the use table, and then my subsequent sale of the fireworks to Arushi will be recorded as a positive export. Those are all in the use table. But these will not be recorded as imports because the output I generated in the merchanting is reflected as a margin in trade. Okay, so that's how it's recorded. Mostly this would be reflected in the use table. But this is an example of exports and imports that can be that are included in the SNA. Okay, so I hope that was clear where the economic change of ownership occurred and where it did not. Okay, and finally, a special category within imports is the further adjustment to take into account direct purchases by residents abroad. So either for business purposes or for leisure. So there are actually different treatments for these kinds of travelers. So we have the business travelers, and we have travelers for leisure and other or for pleasure. So for example, an example of resident business travelers expenditure would be, for example, I am an architect, I'm working on a project abroad. So I book my accommodation, I spend on food, transportation, and my materials abroad for my presentation and projects. My expenditures will be reflected as imports in the line direct purchases of residents abroad in the supply table. But it's a different story in the use table. Since I work there, since I travel there for business, my activities, my consumption will be reflected in the intermediate consumption matrix, specifically in the row of the industry I belong in, which should be architectural services. But if I were a resident traveler on a personal trip for leisure, then I record my consumption in household final consumption expenditure, which will be explained later on. And still, it's my purchases also represent an import of services in the supply table. So, for example, I traveled to Cambodia to visit Angkor Wat for leisure. I booked my accommodation, spent on food, transportation, souvenirs. All these purchases will be recorded as imports of goods and services in the line of direct purchases of residents abroad. But in the use table, they will be reflected in household final consumption expenditure of the same line of direct purchases of residents abroad. Okay. So another quiz is on the way. I hope everyone's able to pay attention to the details that I shared earlier. So an example, or this is a question related to imports. Vietnam sells coffee beans to Singapore by transporting these to Malaysia first, which then transports the same to Singapore. Question: does Vietnam's sale of coffee beans constitute an import of goods by Malaysia under the BOP and SNA? Yes or no? Okay, also on my go signal, please do type in your answers. Okay, and go. Okay, so the answer here, sorry, hold on. Okay, so the answer here is actually no. So thank you, Jam. Jam was the first to answer. Why? There was no we can everyone can read the question. The question is if it constitutes an import of goods by Malaysia. If it were an import by Singapore, then the answer is yes. But if it were by Malaysia, the answer is no, because there was no change in economic ownership of coffee beans that transpired between Singapore and Malaysia. So Singapore simply transported the goods via Malaysia, and it's another scenario where Singapore arranges for its own transportation and charges Malaysia, or if Malaysia arranges the transportation of Singapore. So that's another topic we'll be discussing in the next section, which is the valuation adjustments, particularly in transport margins. But definitely here, there was no change in economic ownership between these two bordering economies, simply because Malaysia did not purchase these coffee beans. Okay, so I hope that was clear. Okay, thank you, Jam. So now, transitioning to valuation adjustments. So these are adjustments that we make the supply table to bridge the supply at basic prices to purchasers' prices, and ultimately to match now supply at purchasers' prices to the use table. We have four components here. We have the trade margins, transport margins, taxes on products, and subsidies on products. So let's go first with our trade margins. These are simply the markup for trade services that a user or a producer gets. It's taken from the wholesale and retail trade product rows, and it should be allocated to respective products. Right. So to be able to estimate the column for trade margins here, as highlighted, we have to extract the information from the row on the wholesale and retail trade services. So if you notice, that should be the row on service 1. So for example, it would be this one. And we know now, we know that wholesale and retail trade services refer to the margins obtained from trading activity. So in this vector, we have to take all of them out. That's why we have a negative 30 here. So suppose we have $30 worth of margins here, and we have to allocate that to the respective goods in the supply table where the margins are related to. So essentially, we take $20 from the margins here, we add them to good 1 and $10 to good 2. So what we are doing here is we are adding margins on the supply of each product so that it would later on match with the price that is paid for by the user. Because again, recall, the user purchaser's prices represents prices by which the user um, purchases the product. So it includes the margins and your taxes and less the subsidies. So that's exactly why we need to do this allocation. And if you notice, the total sum of this column must be 0. Because we are simply reallocating this margin here to the respective products. The same adjustment sort of applies also for transport margins. Sorry, before going there, some sources of data for trade margins would include data on trading sales or data on trade turnover, data on goods purchased for resale without further processing. So this is different from our example earlier, because then resale of products means that a margin on trading will be generated. So you can recall our merchanting example, like the fireworks I earned from the fireworks. Another would be data also on inventories of goods for resale at the beginning and at the end of the period. business surveys, or special trade surveys. So these would include data on total output of trade margins by industries, or even on a more detailed level. And we can also look at rates of domestic trade margins, preferably those on domestic export by product and by industry. Some countries would have data on that. Moving on to transport margin. So this is a separate column, or sometimes a separate column, sometimes just one column in the supply and use table. This will cover freight transportation services of products. And we have keywords here again. um, these these would cover transportation. These transportation services covered here are those that are arranged by sellers and must be invoiced separately. So what does that mean? Um, in the supply table, you would have a row for transport services, right? So again, assume that is services one. Now, a proportion of these services refers to margins from the transport or delivery of goods. But note that not all transport services are transport margins, um, since transport services may also comprise of passenger transport. And even so, not all deliveries will have margins that can be recorded as transport margins. So to elaborate, it only includes margins from transportation services arranged by the seller. So it could be the manufacturer, wholesaler, or retail trader, in such a way that the purchaser, has to pay separately, or that this delivery is invoiced separately or explicitly for transport costs. Those are the most important elements of this component. So if, on the other hand, transportation was arranged by the purchaser and directly paid for by the purchaser, this will not be, the margins from this will not be included in our transport margins column. So it only occurs when transport services are separately invoiced. So meaning there's an explicit charge for the transportation services. If not, this means that the transportation margin, which is supposed to have been charged, but since it was not explicitly mentioned, or it was not separately invoiced, this will be tucked inside the cost of the good, and it will be part of the basic price of the good, right? So then it's not an addition, it's not a way for us to bridge our basic price to purchaser's price, because it's tucked in the cost. So the purpose of the transportation margin column is to add these margins to the goods so that the total price of the goods now matches the price paid for by the purchaser. Okay, and there are also domestic and import transport margins. Other types of potential margins that are actually not included, so these are non-margin services, would be transit transport, merchanting, and transport of used goods, waste, and scrap. So same principle applies. As trade margins, we deduct the amount of the transport margin from the row to the transport services and allocate it to the relevant products that are transported. So this valuation adjustment should result to zero. Same thing with our trade margins. Data sources would include freight transport costs, sales data, business surveys. Okay. Quiz time. I think this is the last for the supply table. Okay, so if producer A charges an all-inclusive price to buyer B for the delivery of perfumes, and producer A uses its own fleet, will there be a transport margin to be recorded from this transaction? Yes or no? Okay, so on my go signal, you can type in your answer. Okay, ready, go. Okay. Thank you for answering. I think Julian was the first to get the answer after my go signal. Sorry, Jessica. Okay, the answer here is no. The delivery cost must be separately or explicitly invoiced for the delivery charge to be considered as a transport margin. But hold on, I have a follow-up question. What if producer A separately invoices now the delivery charge, and buyer B uses its own fleet, or buyer B enlists the help of another courier, suppose courier C? Will there be a transport margin to be recorded from this transaction? Yes or no? Okay, so on my go signal, you can type your answers and go. Okay. Wala naman. Okay. Okay. So I think, please correct me if I'm wrong. I think no one got the right answer. It's still no. The producer must arrange for transportation and separately invoice the delivery cost to B. So if instead producer A delivers to B or producer A enlists the help of courier C, then the delivery cost will be considered a transport margin. Okay? Sorry guys, sorry girls. So no prize for this one. I hope you understood the technicalities here. Yes, there was a separate invoicing done by A, but B is the one who took charge of arranging the transportation by using its own fleet and by contacting Courier C. But if it were A who did all of that and separately invoiced the delivery charge, then it will be part of your transportation margins. Okay. Valiant effort from everyone. Thank you. So we are down to the last portion. We have taxes and subsidies on products. So these taxes on products are simply taxes that are payable per unit of some goods or services. So these may be a specific amount per unit of quantity of a good or service or calculated ad valorem. And there are three categories here. We have VAT type taxes, taxes and duties on imports excluding VAT, and taxes on products except VAT and import taxes. I will not be delving into the specific categories, but um, these kinds of taxes should be added in our supply table. Okay. And we also have subsidies on products, which we now subtract. So that's why we have taxes less subsidies on products. And these must be only subsidies payable per unit of a good or service. And we have three categories of subsidies. We have import subsidies, export subsidies, and other subsidies on products. Okay. And our data sources for these would be tax data from the government and other information already written in their tax legislature. So, and these would include the rates. These might be included in the tax legislature or other documents containing the different rates used in their taxes. So to recap, and maybe no, not to recap, but to conclude the discussion on the supply table, it would be, so once we have our data, we have the domestic output matrix, imports, you've identified the appropriate allocations of trade and transport margins, we have added and subtracted our taxes and subsidies, we are able now to compile a complete supply table. But just to be sure, we must apply these specific considerations. We need to exhaust all possible data sources. So not only NSO data, we can also use administrative data from other agencies, financial statements, surveys, studies, reports from businesses, enterprise production and purchasing data, and so on. Then we need to classify our data properly. Do the estimates belong to the proper industry, to the proper activity, or to the proper product? Are they market or non-market output? And if data is not available, we must make estimations and apply the appropriate methods to do so. We must also review our valuations. So are we using the sum of costs approach, or are we using the value at basic prices? In terms of valuation, are we getting the data right at basic prices, or are we getting them already at purchases prices? Is our imports at CAF or at FOB? Finally, we need to check for the plausibility of data and estimates and make sure that these are all true to real life. So to wrap up, we have these few advantages for compiling supply tables. Of course, the supply table exhaustively covers and accounts for production within an economy. With the supply table, we are able to map all the resources within an economy based on the available data sources that we have. It also makes it easier to identify key sectors in the economy by seeing which sectors have the most output with respect to production. And with the help of the use table, we are able to produce three coherent measures of GDP. Right. So that ends my discussion on the supply table. I'll be turning it over to Nins to do the discussion on the use table. Thank you, everyone.
Can you see my screen?
Yes,
Yes.
needs.
Okay. Now let's go through the use table. So to start, we will have an overview of the use table followed by a discussion of its components. So here we have intermediate consumption, which are the inputs of goods and services that producers of an economy need to produce their output. Another component would be the final use, which provides information on the goods and services that are for final use by different activities or institutions. And then lastly, we have gross value added, which provides information such as primary inputs in the form of labor and capital that go into the production. Okay. So to illustrate, we have here a simple template. So the use table shows the use of goods and services by type of product and by type of use. So again, we have here the intermediate use by businesses and final uses by households and fish, government, capital formation, and so on. So, while the supply table provides information on the resources of the economy, the use table offers information on how these resources will be used. So, similar in structure to the supply table as discussed by Bonina, the use table is also a product by industry table. It lists the products in rows, while industries, households, nonprofit institutions, government, inventories, and exports are listed in the columns. So with this, we are able to identify who purchases a specific type of good or service. So here we have in green the intermediate consumption by product and by industry. And in yellow, we have the final uses by product and category. And it also shows the value added component here colored in blue. This is the one generated by each industry, which can comprise of wages, taxes on production, and operating surplus or profits. And then here we have the total output by industry in orange and the total use by product in red. So the use table again allows us to identify where the resources go and how are they used, as well as the inputs used in production. So, similar to the example by Nina a while ago, let's say that an economy has agriculture as its sole industry. So, we have here crops and fish as existing resources derived from the supply table. And suppose that we have a supply of $500 worth of crops and $200 worth of fish in the economy. So there are many ways that these resources can be used. So in the $300 worth of, let's say, wheat supply, $150 is purchased by the mills to be transformed or processed into another product, and the remaining $150 is then exported abroad to be processed by another economy. So the remaining $200 worth from the $500, let's say, will be for corn supply, and for that, $100 is sold to the grocery to be purchased and consumed by households, while the remaining $100 is kept in inventories. So for crops alone, we have explored different uses. So it was processed by another or purchased by another sector as an intermediate or final good. Again, the wheat was also exported, and the corn purchased by households for consumption or as inventory. So on the other side, we have here $200 worth of fish supply. So $100 are sold to households, $50 kept in inventory, and $50 exported abroad. So in this example, we can see how the use table is able to arrange all of this information to provide a flow or path where these resources are consumed, be it domestic or foreign. So the use table again, it gives us information on the cost or input structures of domestic industries, since the use of an input or a final good signifies expenditure for it. Okay. So apart from that, the use table also shows the intermediate inputs and primary inputs, such as labor and capital necessary in production. The total output of the agriculture industry may be composed of several inputs, such as raw materials to produce the crops. And aside from these raw materials, industries will also need other inputs to production, such as the primary inputs that is reflected in gross value added. So let's say for wheat and crops, we have a total output of $500, and the intermediate inputs in producing wheat and crops amount to $200. So here we have seeds and fertilizers amounting to $100 each that was bought from the seed seller or other market producers. And then here we have the primary inputs that amount to a total of $300, which comprise $170, let's say, for the labor cost, $90 for consumption of any fixed capital, and $40 for, let's say, recurrent taxes on land or within the farm. So on the other side, we have for fish, the intermediate inputs, let's say, is worth $150, and this is split across the transportation to fishing sites, so $100, baked fish, let's say 30, and as well as the fishing lines. And then the primary inputs worth $50 account, let's say, for labor costs for the fishermen. So given this, the use table also provides a comprehensive mapping of how inputs are used for production. And aside from mapping the flow of where each product goes, depending on how it was used, the use table gives us information on, again, the cost or input structures of these domestic industries. Okay. So the use table answers the following questions. So first, what products are available for consumption in the economy? So in the use table, we arrange the products in a column. So here at the left, we can see that it is arranged by a product classification. So this is the same way that we do it for the supply table. And the disaggregation of these products will depend on many factors, but primarily on the available data. So next, it answers the question, what are the different uses of goods and services? So we compile the data on the total use of each product that is available in the domestic economy, and the figure should match or balance or should be balanced with the supply table. So we further determine how the goods and services will be used. So whether as inputs for intermediate use by domestic businesses, final goods for use by domestic units, or products used by foreign markets in the form of exports. So the total use is then reflected on the rightmost portion of the table, followed by the exports and final use. However, we will need to identify the types of final use of each good and service. So here we have final use again by households, nonprofit institutions, serving households, governments, and then for gross capital formation, here we have GFC and GCF. So we call this matrix the final consumption matrix since the goods and services will not anymore be further processed by industries and will be taken in their final form for consumption. Okay. So next, we expand the use table such that we identify which industries use goods and services for intermediate consumption. So the use table also answers the question, what inputs are required in production? So taking the intermediate totals, we get the breakdown of intermediate inputs by industries. So this is parallel to the domestic production matrix, and these products could feed into production as raw materials and process further into final goods or other intermediates. So again, apart from raw materials, there are also other inputs called the primary inputs, so labor and capital, that go into the production of output. So summing the intermediate consumption and value added yields us the total output, and this should be the same total output derived from the supply table. So typically, this is the structure of the use table where we have the intermediate consumption matrix, the final use matrix, as well as the gross value added matrix. Okay. So next, we'll discuss the various components of the use table. So again, here we have intermediate consumption, the final consumption expenditure, as well as the gross value added. So here we have an example of the use table where we have the industries and products. So for the industries, it's at the top per column, and we have the products or commodities at the left-hand side. So again, when we put together the supply and use table side by side, the rows should match and it should be balanced. So what are the key partitions or blocks of the use table? So first, we have the intermediate consumption matrix, which covers goods and services required to produce domestic output. So this is measured at purchasers' prices, and it answers the question, what intermediate inputs are required by an industry to produce their output? So next, we have the final demand or the final use matrix that provides information on the costs incurred by institutions in the domestic market on the consumption of final goods or services. So here we have again households, government, NPISH, and gross capital formation. Then next we have exports, which provides information on the intermediate and final goods or services that are used by foreign markets and sold abroad. So again, as mentioned by Munina, similar to the supply table, we have here the adjustment rules. So we have the direct purchases by residents abroad and direct purchases of non-residents in the domestic market. So we have these extra rows, and here we can also see the total use at purchasers' prices, which is the sum of all the rows, which should equal to the supply, as well as the total use by industry, institutions, and exports. So your column totals. So in this slide, we have here the value added quadrant. So the value added quadrant in the use table, this is just the difference between the domestic production and intermediate consumption. by kind of activity, and it sits below the intermediate consumption matrix. So column-wise, adding all inputs to production plus all primary inputs will comprise the total inputs, and this should match to the supply table. And in the columns, in the intermediate consumption matrix, it shows us the cost structure of each industry. And we can see here how the total cost of producing output by, let's say, industry one comprises of goods one and two to make up its output. And for the gross fixed capital formation, it allows us to see the distribution of the main types of investment. Okay. So first, let's discuss intermediate consumption. So for this one, it answers how much of good one does industry one purchase for further production. So it is the value of goods and services consumed as inputs to a production process. And this includes non-durable goods and services within an expected life of less than 1 year, which are used up in production by industries. Thus, it excludes the following. So we have here fixed assets, goods purchased for resale, inventories, and goods paid for by employers for staff. So again, it does not include all purchases that were made by business, as it excludes fixed assets whose consumption is recorded again as consumption of fixed capital. Okay. So we have here the dimensions of the intermediate consumption. So looking row-wise, we observe how a good or service is used within domestic industries for their own respective production. So here we have goods one, uh, let's say for fuel, and let's say industry one would be agriculture, and it uses $55 worth of fuel for production and is used as an input to be further processed into something else. And then looking column wise, we observe where an industry sources its inputs from. So let's say, for example, industry one or agriculture sources $55 worth of fuel, and then $25 worth of cattle. And then the total value of intermediate inputs used by the sector is $80. And for the rows, as intermediate, the total is at $100. So there are two approaches for compiling the use table. First would be the input approach. So here, the input approach is based on collected data, and it is the recommended approach for populating the intermediate consumption matrix of the use table. Uh, it is recommended to start the compilation process by starting with the column, because the data received from the sources will show these. So again, the starting point with this approach would be for the total intermediate consumption for the total economy. And here we have the following data sources. So here first we have establishment or enterprise surveys, which supplies information on the structural characteristics of industries. It also provides information on sales by establishments to other industries and inputs. Then next, we have annual reports and financial statements. So this can provide information on the cost incurred. And for business and government accounts, it can also provide, let's say, breakdown on the flow of inputs of businesses or government entities. And we also have industry specific reports and studies, as well as statistical and business surveys. So all of the information from these sources should give us the value of inputs consumed by each industry on a per product level and industry cost structure. So if again also if the data sources are detailed, then we are able to fill in actual values of consumption by industry of certain products. And if the data is not as detailed, we can use supplementary surveys or make assumptions based on observations, but we need to be careful. Okay. So for the next approach would be the intermediate consumption by product. So this is the output approach. So for this one, the aim of this method is to be able to trace across each row of the use table the consumption of every product by industries in the intermediate use and by the various institutional sectors as final use. So the data sources would be as follows. So we have here the production statistics. So it can detail how the production flows in an economy. And we have here information from product suppliers and users. So we can determine where the product flows to, whether it's in the intermediate consumption or final use. And another data source would be information that is derived from the users or producers of certain goods and services. So we can also check similar industries or neighboring economies if nothing is known about inputs of some industries. Okay. So next, let's discuss the final use part. So we have here the final consumption expenditure, the cross capital formation, and um, exports, and as well as the following components. Okay. So first, let's discuss the household final consumption expenditure or HFCE. So the HFCE consists of expenditures incurred by resident households on consumption goods and services. And these goods and services can either be domestically produced or imported and are acquired or consumed for the well-being of households. And the HFCE, it is usually the largest item on the use side, and it excludes expenditures on investment in fixed assets and acquisition of valuables. So we have here the main components of the HFCE, which would be first the purchase of goods and services. So these are your goods and services that are paid for by households, and it includes payments for both market and non-market products. So the purchase of goods and services accounts a bulk of the household spending, and this includes expenditures such as the utilities, purchase of coal, clothes, meals, and fuel, and so on. Then next, we have own consumption of goods and services. So this would be the output of households intended for their own final consumption. So recall that the goods produced by households for their own consumption are included in the output. And note that this applies only to goods. So with the exception of housing services, the own account production of services may fall outside of the production boundary of the national accounts. And for the or supply equals use identity to hold, these goods must be consumed. And often, these are produced and consumed by households. And then last component would be income earned in kind. So this consists of goods and services which are provided either free or at a price lower than the market price by the reseller. And it can also relate to goods and services produced by let's say an employer or by the employer as well as purchased by it. So let's say an example would be, let's say, free gas or meals provided to the staff. Okay. Other components that may be part of household final consumption expenditure would be the following. So we have here services produced by paid domestic staff. So in many countries, the domestic staff may undertake services such as cleaning, food preparation, and child care. And in these cases, the amount paid to the domestic staff is treated as if the household purchased the service directly from a company. Another would be licenses and fees not included in taxes. So in some countries, there may be households that are required to pay a license or other types of fees to the government. And in some cases, when the level of the fee is provided to the government, it may be classified as a service and is not a tax. But this will really depend on the country. And then another would be the services of insurance and pension funds. So households they may pay management fees related to the administration of insurance policies, the pension funds, and these are often explicit fees. Um, However, for this one, it may be difficult to estimate because they may be combined with a initial investment or another investment provided to the household. Okay. Next, we have the data sources. So for household final consumption expenditure, we can explore the following. So first, we have the household budget surveys or the household income expenditure surveys. So for this one, it can provide expenditure classified by purpose and by product, and it may contain information on the production for own consumption depending on the design of the survey. But for this one, the household income expenditure surveys, this is generally used by national accountants to produce annual estimates of household expenditures at the detailed level, since it is usually the most comprehensive type of survey, and it allows them to break down estimates in by let's say socioeconomic social demographic groups. But the downside of this is that it is expensive and it is not very timely, and countries usually conduct this survey every 3 to 5 years. Another possible source that can be explored would be the retail surveys, since most retail sales are made to households. So these retail surveys can provide, let's say, information on the turnover or revenue of retail trade enterprises. And then another would be the use of administrative data. So this can be useful for products subject to, let's say, taxation or to be subsidized. And since many countries, let's say, administer VAT or fees, um, businesses are then required to complete or submit, let's say, monthly or quarterly forms indicating their sales, as well as the amount of, let's say, VAT charge, as well as the amount paid. So for the administrative data, this can be uh, added, explored, and other regulatory data such as registrations and data on um, licenses can be combined to derive estimates of household spending on, let's say, specific goods and services. Okay. So next we have non-profit institutions serving households. So this includes trade unions, political parties, religious and charitable organizations, as well as sports and recreation associations. So in many economies, this expenditure is included in the HFCE, but the SNA recommends showing their consumption expenditure in a separate column. So again, here we have the non-market gross output of producers of NFISH, and this is subtracted from the receipts from sales or value that was actually paid for by the households, and then we add the social transfers in kind. Under NFISH, we have the following data sources. So we have the business surveys, which can allow the measurement of NFISH output by industry and by product. And we can also make use of tax data. So some countries require nonprofit institutions to register with the government and submit annual statements of revenue and expenses. So it's possible that they have data available for these institutions, and can include the components required to compile estimates of final consumption expenditure. But a challenge here would be that since the NFISH, we could say that the institutions are small. It's possible that they are exempt from reporting. So that's a tricky part. And then next we have charitable donations. So it's possible that some households report charitable donations on their personal tax forms, and this can be used to estimate a share of NFISH final consumption expenditure. But for this one, it may only cover a small portion, and assumptions will need to be made between the share of charitable donations that represent final consumption expenditures. Okay. So next, we have the government final consumption expenditure, or GFCE, which consists of expenditure incurred by the general government on both individual and collective consumption services. So it consists of the non-market gross output of government, less the receipts from sales, plus the purchases of goods and services provided to households for free or at low prices. Data sources would include um, administrative data, and mainly provided by finance ministries or local government units. And this can be supplemented with specific survey data, such as detailed government expenditure. So next, we have gross fixed capital formation or GFCF. So it is defined as the total value of producers' acquisitions of fixed assets, less disposals, plus the expenditure on services that add to the value of non-produced assets. So data sources can be through the use of the following. So we have here the business statistics and surveys, which can contain information on purchases and sales of capital equipment. And it can provide information on the GFCF by product that is linked to the purchases of goods and services for intermediate consumption. We also have government accounts, which can provide information on investments within the central or local government. And it can also provide a detailed distribution of investment products by main types of investment. Then lastly, we have information on supply of investment products. So in the event that business statistics surveys or government accounts data are unavailable, we can estimate GFCF using information or supply of investment products, such as um, checking for other structure of economies. Okay. So now we have changes in inventories, which is defined as the goods and services that are held for sale, used in production, or used at a later date. So this is calculated by type of inventory, and it is calculated as the value of inventories at the time of recording less the value of withdrawals and recurrent losses. So for the main types of inventories, we have the following. So first, we have materials and supplies, which are goods intended to be used as intermediate inputs to production. So these are products that an enterprise holds in inventory with the intention of using them as intermediate inputs to production. Then next, we have works in progress. So these are goods not sufficiently processed to be sold, meaning it is output that is not yet sufficiently processed for delivery or for other use. Then next, we have finished goods, which are processed goods to be sold at a later time, and goods for resale, which are goods acquired by enterprises such as wholesalers and retailers for the purpose of reselling them to the customers. Okay. So next we have exports of goods and services. This is the production intended for sale in foreign markets, and it includes exports for intermediate consumption and final goods exports. So the exports vector in the use table would include exports that are intended for intermediate consumption or final consumption. Okay. And this is also valued at FOB prices, which includes a value of goods at basic prices, the trade and transport services or margins to the border, as well as the taxes less subsidies on products. So data sources to compile these would be, let's say for goods, foreign trade statistics, which can which is usually reported at a detailed level. And then for services, we can make use of balance of payments data. Okay. So I hope everyone is still there. Now it's time for another quiz. I believe this is the last item for this session today. So here's the question. The household final consumption expenditure includes the expenditure of households include incurred, excluding blank and blank. So for this one, you will need to input two letters since these are two items. So okay, you may now begin to type. So go. I hope hold on. Okay. I believe Arushi. Yeah, there. Arushi was able to answer correctly. So congratulations. The answer is B and D. Acquisition of valuables and investment uh, in fixed assets. Okay. So congratulations. Okay. So next, let's discuss gross value added. So here we have the following components. So we have the compensation of employees, other net taxes on production, consumption of fixed capital, as well as operating surplus and mixed income. So recall that the gross value added is equal to the total output minus the total intermediate consumption. Okay. So first, let's discuss the compensation of employees. So this is defined as the total remuneration payable, whether in cash or in kind, payable by a company to an employee. So this may comprise of wages and salaries or actual or imputed social insurance contributions. For this one, the possible data sources would be first the business and government accounts. So this can show values for the wages and salaries, as well as other costs related to employment. Then we can also collect data from tax collecting authorities. So they can provide data on the compensation of employees and will be useful as it can cover industries that are not usually in the scope of usual account statistics or surveys. And then lastly, we have surveys such as labor force, household budget, or population or censuses. Then next, we have consumption of fixed capital. So here we have the sorry. Okay. All right. Okay, so next we have here consumption of fixed capital, which provides the amount of fixed assets used in the current production and can be estimated based on the stock of fixed assets and the probable average economic life of different categories. Then we also have operating surplus and mixed income. So here it has the direct estimates of mixed income and gross operating surplus that can be estimated using administrative sources as well as business accounts. And then we also have other net taxes on production. So this would be the taxes, except the taxes on products incurred as a result of production, less the subsidies, except the subsidies on products received as a consequence of that production. So given the components of the use table, I'll turn it over now to Monina to discuss the identities in the supply and use table as well as the benefits in compiling the SUT.
Okay, thank you, Nins. I'll be resharing my screen once again. Okay. Is everyone able to see my screen?
Yes, ma'am.
Okay, thank you. Okay, all right. So we're now at the tail end of our discussion of the supply news table. But just to bring everything together, we want to focus now more on the importance of compiling the SUT. So the SUT, it's most commonly known as the a framework that best reconciles these three identities, or national accounts identities. So the first identity we have is that total output must equal total input. So this corresponds to the fundamental identity in national accounts, where production output must comprise the all the sums of all intermediate and primary inputs to production. Intermediate inputs being our intermediate consumption found in the use table, and primary inputs found in our gross value added table that belongs to the use table. Okay, so then if you subtract your IC, which is your intermediate consumption, and gross value added from output, it would be 0. Okay. The second identity would be that supply must equal use. So this means that all resources available for intermediate and final use in an economy must have been supplied domestically or from abroad. So then that just means that your supply, which is your domestic production, plus your imports, should be the same as your intermediate consumption, final consumption, capital formation, and exports. And finally, the last identity is that all three approaches in calculating the GDP, meaning GDP by production, by expenditure, and by income approach, are the same once we have a balanced supply and use table. Okay. So just to visualize, we have the first identity. Before that, we have on the left just a very basic characterization of the supply table, and on the right, a visualization of the use table. So we have here total output on the last row, and total in of the supply table, and total input on the last row of the use table. This is our first identity, where total output by industry should be the total input that is produced by all industries um, producing intermediate and primary inputs. Okay. The second rather identity would be that total supply on a product level should equal total use on a product level. So the amount of products available for use must have been again supplied domestically and or from imports, and must have been used for whatever purpose. And finally, all three approaches in calculating the GDP are the same. So recall that GDP is also the same as your gross value added. So here at the bottom of the use table, we would have your row for your total intermediate consumption, total gross value added, and total output. So recall that output equals IC plus your GVA, and this GVA here would be the gross value added computed via the production approach. But also in the GVA matrix that's part of the use table, we have a computation of the GVA here, where we combine your compensation of employees, taxes less subsidies, operating surplus, and etc. The one that Means just mentioned earlier. This would be our GVA calculated via the income approach. And elsewhere, in the use table, we have GDP by expenditure approach. So GDP by expenditure approach is your classic consumption plus investment plus government plus exports minus imports. And these are macroeconomic identities found in the supply and use table. So these three will match each other when we have a balanced supply and use table. Okay, so now that we've gone to the discussion of balancing the supply and use table, we have just a few guidelines here on how we can balance the supply and use table. So assuming that we have all data for all components, the next step is to balance them. And it's only natural that the SUT will be unbalanced when there are multiple data sources used to compile it. Okay. So the first one is to balance total supply with use first. So go with your biggest totals first. These aggregates must be the same. Without this, we would not be able to do product balances. And if it's difficult to balance the two, try to go back to the three identities that I discussed earlier. review your macroeconomic identities, and assess the reliability of your aggregates. Start You can start with large discrepancies in the output, intermediate consumption, or GVA of products, of industries, and etc. And you can from there you can identify major sources of discrepancies. You can refer or you can consult the NSO regarding the figures provided or figures you estimated, and make use of other data sources as well, such as studies or other surveys. Okay. And finally, you review and corroborate data with published data. Okay. So once that you're able to balance both your supply and your use, see if you can balance each product's supply with each product's use. So you can start balancing on a product level, and this may prove to be a tedious exercise as you would need to check each activity. So you can start first by identifying products with or prioritizing products with major discrepancies. You can do adjustments on a product level, and you can prioritize perhaps those with above 10% or 5% discrepancy between supply and use. So that just means if your supply minus use is above your supply by 5 to 10%, you can prioritize those first in balancing. And see if you can review each component of the supply and use table for those products with major discrepancies. Check also for the possibility of offsetting discrepancies of like or similar products. So for example, there are construction materials such as metals, locks, hinges, etc. that may be similar in nature or in material, where perhaps there are more supply over use. So you can offset them with similar materials with use greater than supply. So a possible rule could be that you can try offsetting these discrepancies using household consumption data for consumer goods. If capital goods, you can go to GFCF. If spare parts, you can make adjustments in your changes in inventories. Or if these are inputs to other products in the use table, you can use intermediate consumption. And you can also see if you can also see if you can adjust via intermediate consumption for non-consumer goods or services. So it pays to really study the activity of each activity related to each product, and how and what the structures of each product is. You can also review trade and transport margins. So see if there are some imbalances that can be offset or allocated by adjusting your margins, of course guided by data and consultations with the NSO. You can also double check with the NSO if there are any updated information on product outputs, perhaps on the balance of payments for imports and exports. For non-market output, and that will concern your government general consumption expenditure and NPISH. And you could also, possibly as a last resort, check the structure of previous supply and use tables as basis, and even other related economies to compare with your current version. So there are many ways to adjust and to balance, but always under the purview and with the consultation of the NSO. So suppose that most of your 5 to 10% and above discrepancies have been addressed, we can resort to an automated balancing, but only for discrepancies that are very, very small. So even if you have really small discrepancies, double check whether which among the products have the largest discrepancies still, and review the estimates that you have again. You can perform further offsetting to limit the size of the discrepancies that have to be allocated via your automated balancing. So usually we employ the RAS method, which is performed commonly to the intermediate consumption matrix, where minor changes to the intermediate consumption matrix are performed to achieve product balances. So this is a method where we force the internal entries of the IC matrix to agree with supposed totals. So these supposed totals should match, of course, or should be the totals that, when added up to the rest of your use components, should match to the supply components or total supply. So then this means that supposed totals must not introduce too much noise to the new IC matrix, which is why we limit discrepancies to below 5%. And of course, once balanced, we need to double check all aggregates and identities again and make sure that the estimates are plausible, realistic, and these are agreed upon with the NSO. All right. So finally, what are the benefits now to compiling and balancing SUTs? Well, they provide, firstly, the ideal framework for integrating the components to the three approaches of measuring GDP. We can use the SUT to provide benchmarks. Here we are able to exhaust and complete our coverage of all possible activities and resources in the economy. We are able to correct for the coverage that we have and other data sources, and we of course produce coherent measures of GDP. Secondly, the SUTs allow for the data confrontation of different primary sources by bringing them together into a single framework. And it also aids in the prioritization of where resources could be allocated to seek quality improvements. So, for example, we see a gap in the collection of data on the output of ICT sector, information and communication sector. So, for example, there's only one data source that we have, and we could not find studies. This gap on data that we've observed could aid in the decision of the NSO and perhaps the National ICT Agency to prioritize data collection for that sector. Another example is that suppose it is observed that agricultural goods have smaller supply relative to use when we put them together side by side, when we put the supply and the use together side by side. So this could inform the NSO that perhaps data collection on the output can be improved or even on the use can be improved. Or perhaps a portion of your agricultural output, which is, for example, a portion that's for own account consumption has not been included in the SUT. So an example would be, for example, agricultural products that farmers produce for their own consumption and not for the market. So this type of own account consumption is still within the production boundary and should be included in your domestic production matrix. So it could be possible that such portion of the output of agriculture was not included and should be included. And when included, could potentially help in balancing your supply and use. Third, when SUTs are produced, it's now relatively easier to compile your input-output tables. So these IoTs derived from your SUTs will be fully compatible and consistent with figures from national accounts. And this thus adds to the credibility and analytical usefulness of both the SUT and IoT. So of course, with the IoT, you know that we are able to perform many kinds of analyses, such as linkage, GVC, tourism, etc. And an IoT is considered more of an analytical tool that shows the relationships between inputs and outputs that are required to produce a given amount of goods and services. So it's very helpful to have that. And we can have that if we have a proper SUT. And finally, with an SUT, we are able to perform many types of analysis outside of our IoTs. So we can do economic analysis, impact and policy analysis, such as seeing the impact of specific economic crises and other types of shocks on the structure of production or consumption within an economy, if we study SUTs across time. We can do industrial and sector analyses by observing changes to specific sectors over time, so perhaps like the tourism or digital economy. And we can also see the contributions of specific sectors to GVCs and modeling. So those are the benefits of so many, among many, and of compiling supply and use tables. And actually that also wraps up the discussion for the SUT framework. So here we simply scratched the surface. There are still a lot of nuances, a lot of things to be said, a lot of sources of data to be considered when compiling each component of the supply and use table. But we hope that the discussion today gives you an idea on how interesting and fun it is to compile supply and use tables, and most importantly, how important it is um, that we start with the compilation of SUTs before we do our IoTs. And how, of course, all our work here is centered on the data that we gather available in the SUTs. So that ends our presentation. Thank you all for listening and participating in our quizzes. We can open the floor for questions.